Hey guys, you've tuned into Money Control. I'm Manisha Gupta, and we're talking about base metals today, where we have seen prices continue to trade mixed, but it's more gains than losses with what we have seen in last few sessions. Well, there is support from the Chinese demand. Remember, China has uplifted most of its lockdowns, and from 1st of June, we have seen those numbers actually kind of improve. Whether it has been about manufacturing, factory activity data, all of that seems to be resuming. The Chinese stimulus as well seems to be ramping up optimism into that market. The US dollar, the strength in that, yes, continues to weigh on, and so does the global growth recession concerns. That is what is weighing onto the markets right now. But all eyes on the ECB meeting today and what kind of a monetary policy would come out of that. And then it is going to be all about the US Fed meeting in the next week on what kind of a tone or interest rate hike we will see from US. We'll tell you on where the most asset classes are headed. But from where we stand right now, we have seen many of these metal prices come off its lows. Remember, the last 3 or 4 weeks have not been so great. We've seen many of these metal prices down anywhere between 15 to 30% from the kind of highs that they saw in the month of March and April, and we seem to be recovering from there on. One, Chinese markets have opened. Two, the inventories have continued to decline. And three, there is some stocking again happening in many of these commodities, which has been supportive. I'll start with copper, where you look on LME, the stocks are the lowest since the month of April at just about 120,000 tons. Not great. So that is clearly what has led to prices coming up. We have seen prices gain up by 8% from the 7-month low that we saw in the second week of May itself. So from that 9,090 kind of levels, we're almost nudging 98, 90 and 900 on the streets today. Iron ore prices also have rebounded 15% higher from the May 18 low of around $126 a ton. Here as well, we've come to around $140, $142 kind of levels. And then take a look at the steel rebar numbers, a good jump up there as well, 7% up from the 26 May low of around 4475 yuan. We are nudging around 4600 yuan onto this one as well. So as I said, good recovery in many of these metal prices. Aluminum actually has outperformed when you look at the last 1 week. It has been a 3.5% of jump up in this week itself. The aluminum stocks on LME are at a 21-year lows at around 441,000 tons, and that has been one major supportive factor. Of course, the Chinese aluminum production has been hitting record highs, but when you look at metal, it clearly is China versus the rest of the world right now, and we are picking up cues across board here. The prices in aluminum did hit a high of all time at 4,100, and then we saw the prices decline to 2,700 in the first week of June itself, and from there we've seen this recovery coming in. The prices still are down by around 27 to 29% from its all-time highs. But as I said, from the lower levels, we have started to look at some recovery right now. Markets will depend on the US dollar, the ECB meeting today, the US Fed meeting in the next week, the expectation that there is going to be not just a rate hike, but also curbing of the bond purchase program. So the quantitative easing also could be easing off. So that is what is weighing onto the metal prices right now. The economic data are not so strong. So the markets do believe that there's not a very big upside in case of metals from here on, but the kind of sell-off that we saw, some buying opportunities definitely emerging within the sector now.